Generally, as a stock investor, you're going to fall into one of two categories: short-term or long-term stock investing and trading. The question is, which one is better? And more specifically, which one is better suited for you? By the end of this video, I'm hoping to give you all the information that you need to make that decision for yourself. Let's get into it. If we break these two time horizons down a little bit further, from short term and long term, we get common themes called day trading and swing trading. And those who prefer day trading are the ones that are going to be on the shorter term side when it comes to your time horizon for your trades. In the case of the short-term time horizon, the day trader is going to open their trades and then close them out within a matter of minutes or even hours, but no more than that. Their trades are predicated and based upon having a pattern or a signal in place for a singular trading day. After we go beyond that singular trading day and extend a trade out for a number of days, weeks, or even months, we get into what's known as swing trading, or a more longer term investment period. Thus the difference in the name based on the time involved in the trade. Now, the execution and application of these two very different types of trading is really going to depend on the time involvement you have to make the trades and your setup. For example, day traders constantly monitor the markets, looking for little movements and swings in a particular stock or fund, and look to exploit that to become a profitable trader. The downside to this is that they are glued to their computer or their phone for multiple hours every single day, trying to work the margins to make a profit. This may not be suitable though for you if you have a full-time job that requires your attention. You can't just shove off work to go day trade for 6 hours a day and just come back and think everything's going to be fine. If you have to report early in the morning, 8 or 9 o'clock when the market opens, you may not have the time investment possible to execute day trades profitably. And if you try to do so with a reduced amount of time, well, things usually don't go so well. But for someone who doesn't have a full-time job, maybe you're retired looking to day trade to supplement your income, you just want to day trade full-time, that's your gig and jam. When you have the time to invest and be at that screen or be on your phone, however you want to set it up, when you invest the time, you have a better chance of being profitable as a day trader monitoring the stock market hours and hours out of the day. And unless you have a boatload of time kicking around and your days are free, most people, myself included, find that swing trading or long-term trading is a more realistic approach to making money in the stock market. There's a less time demand. You can do so with a limited amount of research, and long-term plays in the market are going to be your competitive advantage. I've been there and I've done both the day trading and the swing or long-term trading things. Day trading for me was just too much high frequency, as Matthew McConaughey outlined in Wolf of Wall Street. Numbers going around all day, looking at the chart. It is hard to do. It is hard to dig in and just make a career out of it. I advocate for those of you trying to do it, give it a shot. If it's not for you, switch over to a more realistic and more relaxed approach of swing or long-term trading. The key is that you have to stay invested long-term, have conviction in your stocks, whereas a day trader may just go in and out, in and out. A longer term or swing trader can have a position on for weeks and months, as we've said. So there has to be conviction behind the move. But as the saying goes in the stock market, a lot of times it's not about timing the market, it's about time in the market. So as a longer term trader, the odds and statistics are stacked greatly in your favor, assuming you do some research up front, you pick some decent blue chip companies, let your money sit there and compound, and you get paid the interest for doing so long into the future. So at this point, I hope it is crystal clear for you at which option may be better suited for your trading style and your life overall. If you got the free time and you got the audio frequency to dial into the market, day trading may be the better solution. If you don't, you're working a full-time job, you don't have the time to invest, then maybe swing or long-term trading is the answer. Whatever it may be, always remember, do your research, keep investing in yourself, follow along for more if you got some value here today, and I'll catch you on the next video.